You are watching this at exactly the right moment. Not because I planned it that way, but because what happened in the last 72 hours may have quietly reset the entire Bitcoin equation. And most people are still scrolling past it without realizing what they just missed. Let me ask you something before we go any further. When was the last time three completely unrelated forces, geopolitical, institutional, and regulatory, all broke in Bitcoin's favor on the same week? Think about that. Not one, not two, three. A potential peace deal that nobody in crypto was tracking closely enough. A 1.4 trillion yen ETF wave building in Japan. And I'll explain exactly what that number means in a moment because it's more significant than any headline has given it credit for. And a piece of American legislation sitting on the Senate floor right now that could permanently change how every dollar of institutional money flows into this asset class. Each of these stories, on its own, would justify a full breakdown. Together, they are telling a story that the daily price charts are not capturing yet. Now here's what I need you to understand from the start. This is not a video about whether Bitcoin goes up tomorrow. This is a video about what the world looks like 6 months from now if these three threads hold together. And if you've been in this market long enough, you already know. By the time the price reflects the fundamentals, the window for early positioning is already closed. So stay with me. Every single part of this breakdown matters. And drop a comment right now. Where are you watching from? What time is it there? Because this community is truly global, and I want to know what time zone caught this video first today. Let's get into it. Let me take you back to the first week of June 2026. Bitcoin was sitting just under $61,000. Sentiment was negative. ETF outflows had been running for 13 consecutive trading days. Analysts were calling it a crypto winter. Social media was filled with bearish takes. And then something happened that had nothing to do with blockchain, nothing to do with wallets, nothing to do with halving cycles. The Iran conflict began moving toward resolution. Now, before you skip ahead, because I know some of you are tempted, stay with me here, because this is not a geopolitics lesson. This is a liquidity lesson. And understanding this distinction is the difference between investors who see moves coming and investors who only see them in hindsight. Here is the background you need. The conflict between the United States and Iran began escalating in late February 2026. What followed was a regional crisis that sent energy prices surging because the Strait of Hormuz, the narrow waterway through which roughly 20% of the world's daily petroleum liquids pass, became restricted. Think about that for a moment. 1/5 of the world's oil supply pinched through a geographic choke point. What does that do to inflation? What does that do to treasury yields? What does that do to risk appetite globally? It hammers it. And when risk appetite collapses, money flows to safety. Government bonds, cash, the dollar. Risk assets suffer. Equities suffer. And crypto, which the institutional world still treats as a high beta risk asset, gets sold. That is precisely what happened. Bitcoin dropped from roughly $73,000 to below $60,000 in the span of one volatile week. That is the sharpest decline since late 2024. Now here is the part that matters. On June 11th, 2026, President Trump announced that a peace deal framework had been reached. The Strait of Hormuz would reopen. Oil prices began falling. Treasury yields eased. Equities rallied across Asian, European, and American markets. And Bitcoin? It jumped from $61,000 to $63,450 in a single session, a 3% move in hours. By June 13th, it was trading near $64,200. By today, June 15th, it is pushed towards $65,695. Now, I want you to think about something that very few people are framing correctly. The peace deal framework has not been fully signed as of today. It is close. Iran's foreign ministry suggested the memorandum of understanding was not finalized yesterday, but that the possibility of signing in the coming days cannot be ruled out. What does that mean for Bitcoin? It means the market has partially, but not fully, priced in this catalyst. The relief rally we have seen over the last 4 days reflects uncertainty resolving. But if and when a binding, formal agreement is signed and the strait reopens, the downstream effects become significant. Oil prices fall further, inflation expectations cool, the Federal Reserve's pressure to hold rates high begins to ease, and capital that has been sitting defensively starts looking for places to work. Comment below if you think the Iran peace deal is the most underrated catalyst Bitcoin has had all year. I genuinely want to know what this community thinks. Because crypto analyst Michael van de Papa put it clearly this past weekend. His words, if the deal closes, liquidity will pour back into risk-on assets, and Bitcoin stands to benefit directly as ETF outflows that dominated May and early June reverse course. 16 consecutive days of outflows from spot Bitcoin ETFs ended last week. Today, inflows returned. BlackRock's iShares Bitcoin Trust recorded $35 million in fresh inflows. Fidelity's FBTC added $42 million. Total net inflows on June 15th came in at $85.8 million. That is a reversal of trend, and reversals of trend are exactly what precedes significant price moves in either direction. But here's what nobody is telling you about this geopolitical story. The DXY, the US dollar index, is currently sitting at 99.56. That is a downward trend for the dollar, and a weakening dollar historically creates favorable conditions for Bitcoin, because Bitcoin is priced in dollars, and when the dollar loses purchasing power, hard assets tend to appreciate in dollar terms. You need to understand this dynamic before I show you what's building in Japan, because the two stories are connected in a way most analysts are not connecting. Stay with me. Japan manages $14.66 trillion in household financial assets. Now ask yourself, what happens if even 1% of that money starts looking for crypto exposure through a regulated, familiar investment vehicle? That is $146 billion searching for a home. And that is exactly what Japan's financial system may be on the verge of enabling. Here's the story, and it has been building quietly for months, while Western crypto media was focused on ETF outflows and the SpaceX IPO drama. Japan's ruling Liberal Democratic Party formally submitted a proposal on June 1st, 2026, just 2 weeks ago, recommending that the government create a legal framework for cryptocurrency ETFs. Japan's finance minister received the proposal directly from the LDP's blockchain promotion panel. The panel was explicit. Crypto ETFs would provide investors with easy-to-understand ways of investment. That language matters. Easy to understand, familiar, lower friction. This is not a fringe idea floated by crypto enthusiasts. This is Japan's governing party, the LDP, going on record to recommend that crypto ETFs become a regulated investment product available on the Tokyo Stock Exchange. But let me give you the numbers that should really stop you in your tracks. XWin Research Japan published an analysis this month. Their conservative scenario, not the bullish case, the conservative one, projects that Japanese spot Bitcoin ETFs could attract 900 billion yen, which is $5.61 billion, upon launch. The base case, 1.4 trillion yen, $8.73 billion. The bullish case, 3.1 trillion yen, $19.34 billion in the first year alone. For context, when US spot Bitcoin ETFs launched in January 2024, the inflows that shocked Wall Street in those early months look comparable to what Japan's conservative scenario projects. And those US ETF inflows drove Bitcoin to new all-time highs. Now here's the part that makes this even more interesting. Japan's Financial Services Authority is reportedly aiming to enable crypto ETF trading on the Tokyo Stock Exchange by 2028. But the regulatory groundwork, reclassifying crypto assets under the Financial Instruments and Exchange Act, is being laid in 2026. And a crucial reform to Japan's crypto tax structure is being considered as early as 2027, which would cap the crypto tax rate at 20%, down from a punishing 55% under the current miscellaneous income classification. Think about what that tax reform means. Right now, a Japanese investor who profits from crypto pays up to 55% in taxes. Under the proposed reform, that drops to 20%. The same flat rate applied to stocks and investment trusts. That single change transforms the economics of crypto investing for millions of Japanese households. SBI Group, one of Japan's largest financial conglomerates, with asset management exceeding $415 billion, has already built the architecture. They have a joint venture with Franklin Templeton. They have set a target of $31.5 billion in crypto ETF AUM within 3 years of launch. Hit like if this Japan story has been completely off your radar until right now. Because this is exactly the kind of development that gets ignored until it's too big to miss. And by then, early movers have already positioned. But here's what they're not telling you about the Japan story. It's not just about Japan. South Korea is watching. Singapore is watching. The Gulf states are watching. Every major financial market that has not yet unlocked institutional-grade crypto products is observing what Japan does next. And if Japan moves, the domino effect on regional adoption could be substantial. But even that is not the most significant piece of news from this week. Because while Japan was building its regulatory framework, and while the Iran peace deal was moving markets, something else was sitting on the United States Senate floor. And most of the crypto community is treating it as background noise. It is not background noise. It might be the loudest signal in the room. And I'll tell you exactly why in just a moment. But first, what city are you watching from right now? Drop it in the comments. I'm always amazed at how many different countries tune into this channel. Let me explain something that the average crypto investor is getting completely wrong. They hear regulation and they think restriction. They think government interference. They think crackdowns. They think SEC enforcement actions and asset freezes. And honestly, that instinct made complete sense from 2017 through 2023, because that was the regulatory reality. Enforcement without clarity, rules without frameworks, ambiguity weaponized. But the Digital Asset Market Clarity Act, the Clarity Act, is a fundamentally different animal. Here's the most important thing to understand. This legislation does not restrict crypto. It legitimizes it. It draws the map that institutional money has been waiting for. Here's where we stand as of today. The Clarity Act passed the House of Representatives in July 2025 with a bipartisan vote of 294 to 134. That is not a narrow partisan majority. That is a landslide. The Senate Banking Committee advanced it on May 14, 2026, in a 15-9 vote. On June 1st, 2 weeks ago, the bill was placed on the Senate legislative calendar under general orders as calendar number 423. That means it is formally eligible for a full Senate floor vote. And this week, as the FOMC meets on June 17th, just 2 days from now, the intersection of regulatory clarity and monetary policy is creating one of the most complex but potentially powerful setups Bitcoin has faced in years. Let me explain the FOMC piece, because it matters more than most people are acknowledging right now. The Fed has held rates steady in the 3.5 to 3.75% range for 3 consecutive meetings. New Fed Chair Kevin Warsh, who took over from Jerome Powell on May 15th, is widely viewed as a more hawkish voice. Markets are pricing in a rate hold on Wednesday. But here's the nuance that changes everything. With the Iran peace deal bringing oil prices down, with inflation pressure potentially easing, and with a weakening dollar, the Fed's argument for staying higher for longer begins to soften. If Warsh's tone on Wednesday is anything other than aggressively hawkish, the crypto market could read that as a green light. And if the Clarity Act clears the full Senate, which Senator Cynthia Lummis called inevitable at the Bitcoin 2026 conference, describing the stablecoin and market structure provisions as almost 99% sorted out, the remaining institutional hesitation around crypto starts to dissolve. This is where it gets really concerning for people who are sitting on the sidelines. Because here's what institutional money has been waiting for. First, clear rules about which assets are commodities and which are securities, so legal and compliance teams can sign off on allocations. Second, regulated ETF vehicles in multiple jurisdictions, so pension funds, endowments, and sovereign wealth funds have familiar, audited instruments to use. Third, a macro environment where rates are stable or falling, so the opportunity cost of holding a non-yielding asset like Bitcoin declines. Right now, in June 2026, all 3 of those conditions are either in place or moving into place simultaneously. Does that guarantee Bitcoin surges from 65,000 to 100,000 this year? No, markets are not that predictable. But does it change the probability landscape meaningfully? Standard Chartered analyst Jeffrey Kendrick said last Friday that Bitcoin has likely set its cycle low at approximately $59,000. His words, a potential peace deal, renewed corporate treasury buying, and positive ETF inflows would confirm a durable market bottom. You need to understand something before I show you what comes next. The last time this kind of regulatory institutional macro alignment appeared was in late 2023, right before the SEC approved spot Bitcoin ETFs in January 2024. Bitcoin was trading around $42,000 at that point. Within months, it had set new all-time highs. History does not repeat exactly, but students of markets recognize the pattern. Subscribe to the Wealth Continuum right now if you want to track every major development in this regulatory story as it unfolds in real time. The FOMC meeting is Wednesday. The Clarity Act vote is imminent. We will cover both. Let's zoom out and look at what we actually have here. Thread 1. A geopolitical conflict, the Iran war, that has been suppressing global risk appetite for months, is moving toward resolution. Oil prices are falling. The dollar is weakening. Bitcoin ETF inflows have returned today after weeks of outflows. Thread 2. Japan, a country managing nearly $15 trillion in household financial assets, is formally building the regulatory and tax infrastructure for crypto ETFs that analysts project could absorb between $5 and $19 billion in the first year of launch. Thread 3. The most comprehensive crypto regulatory framework in U.S. history is sitting on the Senate floor awaiting a vote, while a new Fed chair is about to deliver his first major interest rate statement this week. Now let me ask you a question that I want you to sit with. What are the conditions that have historically preceded Bitcoin's largest upward moves? Look at January 2024. ETF approval, institutional access, narrative shift. Look at late 2020. Stimulus liquidity, institutional adoption. By companies like MicroStrategy, PayPal entering the space. Look at late 2021. Retail FOMO meeting institutional infrastructure. In every single case, the catalysts were a combination of liquidity, institutional access, and narrative legitimacy arriving together. And what are we looking at today? Improving liquidity conditions as Iran tensions ease and the dollar weakens. Expanding institutional access through the Japan ETF framework and the Clarity Act. Growing legitimacy as the world's largest IPO in history, SpaceX, disclosed substantial Bitcoin treasury holdings, and as political and regulatory frameworks worldwide continue to treat crypto as a real asset class, not a fringe experiment. The pattern is not identical to previous cycles. It never is. But the architecture is recognizable. Now here's where I want to push back on something, because I think too many people in this space are either too euphoric or too cynical, and neither helps you make good decisions. Bitcoin dropped from $73,000 to $59,000 in less than 2 weeks earlier this month. That is a 20% drawdown. That is violent, that is uncomfortable, and it happened fast. If you held through that without a plan, without understanding why it was happening, that was a stressful experience, and that stress often leads to decisions that cost money, selling at the bottom, buying back higher. The reason this channel exists is to help you understand the why behind the price moves, not just the what. Because the what, the price number, is available on any app. The why is where positioning advantage lives. And right now, the why is telling an interesting story. But there's one more layer to this, one that most analysts are treating as noise, and I think it's actually the signal hiding in plain sight. Stay with me. Here's a paradox that experienced market observers understand very well. The most dangerous time to invest is when everyone agrees it's the perfect time. The best opportunities often emerge when intelligent, thoughtful people disagree, when fear and doubt coexist with real, verifiable, improving fundamentals. That is precisely where we are today. Look at the data. Bitcoin has recovered from $59,000 to $65,695 as of today. That is a recovery of more than 11% in roughly 1 week. But what does market sentiment look like right now? According to CoinCodex's technical analysis, as of today, June 15th, 14 indicators are signaling bullish momentum, 17 are signaling bearish. The market is not euphoric, it is divided. Polymarket, the prediction market, shows that as of today, over $15.78 million has been wagered on Bitcoin's June price outcome, reflecting genuine uncertainty across the community. And Standard Chartered's Jeffrey Kendrick is watching 3 specific confirmation signals before declaring that the floor is fully secure. Strategies, Michael Saylor resuming Bitcoin purchases this week, positive ETF inflows sustaining beyond a single day, and a non-hawkish FOMC statement on Wednesday. One of those 3, the ETF inflows, arrived today. 2 remain. Here's what this means for investors watching this video right now. You are not watching in a moment of obvious, easy clarity. You're watching in a moment of genuine uncertainty, which means the market has not yet fully consensus priced what may be happening. The investors who benefited most from Bitcoin's run to $108,000 in late 2025, which was at the time an all-time high, were not the ones who bought after it was obvious. They were the ones who positioned during the noise. Now, none of this means buy everything right now. That is not what this channel does. We do not give financial advice, we give financial context. But the context right now includes ETF inflows returning, a potential peace deal finalizing, Japan's institutional framework advancing, the Clarity Act on the Senate floor, a Fed meeting in 2 days, and Bitcoin sitting at 65,000, having just bounced from a 20% drawdown. That is a lot of variables converging at once. And the question you should be asking yourself is not, will Bitcoin go up tomorrow? The question is, do I understand what's happening well enough to make a deliberate, informed decision either way? If the answer is no, that is why this channel exists. Share this video right now with someone in your life who's watching Bitcoin but not yet understanding the forces behind it. Because the context matters, the macro matters, the institutional architecture matters. And most people are not getting that context from their news feeds. Let's bring this full circle. Today is June 15th, 2026. Bitcoin is trading at $65,695, up 2.08% on the day. In the last 72 hours, 3 distinct and powerful threads have converged. The Iran peace framework advancing, a geopolitical development that is reshaping global risk appetite, easing oil prices, weakening the dollar, and returning institutional money to risk assets, including Bitcoin. Japan's regulatory apparatus, formally advancing a crypto ETF framework that could absorb between $5 and $19 billion in the first year, tapping into $14.5 trillion in household financial assets that currently have almost zero crypto exposure. And the Clarity Act sitting on the United States Senate floor, the most significant crypto regulatory legislation in American history, ready for a vote that could permanently rewrite how institutional capital engages with digital assets. With the FOMC meeting in 48 hours, the macro picture is about to get either more complicated or significantly clearer. Now let me ask you the question that matters most. Which of these three catalysts do you think will have the biggest impact on Bitcoin's price over the next 6 months? Is it the Iran peace deal and the global liquidity shift it unlocks? Is it Japan's ETF framework and the potential billions it brings from one of the world's most disciplined savings cultures? Or is it the Clarity Act, the regulatory foundation that could open the institutional floodgates in a way that changes Bitcoin's ownership structure permanently? Comment your answer below. I read these, and I want to know what this community is thinking, because collectively, you are some of the most informed people watching this asset class anywhere in the world. If this breakdown gave you a framework you did not have before, hit like. It is the single most direct way to tell the algorithm that this kind of in-depth analysis deserves a wider audience. People are making major financial decisions right now without this context. Your like helps us reach them. Subscribe to the Wealth Continuum if you are not already part of this community. We are not here for daily price predictions and hype. We are here to build the kind of foundational understanding that makes every market cycle less frightening and more navigable. That is the continuum of wealth. Not a single trade, not a single week, but a long-term compounding of knowledge and clarity. And turn on notifications, because the FOMC decision is Wednesday. We will have full coverage the moment Warsh opens his mouth, and the Clarity Act vote timeline is narrowing. When that breaks, we will break it down for you immediately. Share this video with someone right now. One person in your life who is curious about Bitcoin but overwhelmed by the noise. Send it to them today. This is the context they need. And finally, wherever you are watching from, whatever your time zone, whatever the weather outside your window right now, thank you for spending this time with us. The biggest moves in financial markets rarely announce themselves with fanfare. They build quietly in the space between when the fundamentals shift and when the crowd finally notices. The question is always the same. Which side of that gap are you on? I'll see you in the next one. Stay curious, stay grounded, and keep building.